Good morning everybody, it's Chris here from Serene Education with the 4 majors analysis update for the 4th of July 2011. Just going to be looking at the Euro to start with on our CDC strategy. Let's have a look at the daily time frame. You can see the pair is nicely making its way to the upside after their bounce on a prior support area. Let's see there, failed to break any lower recently and we've seen price revert to the upside. However, be aware that depending if you're looking at the wicks, price is now testing or price is now at a ceiling level, depending on how you do it. If you take the wicks into consideration, then we've seen a breakout. If you take the bodies into consideration, then we are looking at a consolidation. So be aware we are coming up to this consolidation area. And you can see that the Asian market trading session has been very thin, open and close. You can see that the price action at the Friday's close, very small indecision as we've hit higher. And this morning on the Japanese market or the Asian market, you can see that the open and close are quite small. Now going into the European session this morning, please be aware that the US market is bank holiday today. It's the 4th of July, Independence Day for them. So the Americans are on leave today. So expect, if anything, possibly a consolidation range to occur. We could see some action depending on how the rest of the world goes about their business. So as it stands now, slight consolidation range on a daily time frame. Notice CTC is still in our favor. We are in an all-time upswing. Price is making its way to the upside, and you can see that it's trading above the major range. So let's have a look at our intraday. You can see the 4 hour, for example. You can see the hesitation to the upside, a lot of sideways movement for a period of days, and then a slight breakout. However, a pullback is in play as we speak. CTC is still, however, blue in our favor, so upside moving average all below us, looking good for further extensions. Same can be said for the hourly chart. I did mention on Friday that we were seeing lower, the highs, even though they were going higher, were starting to fade out. The momentum isn't as great as it was on the initial start of this trend, and you can see that the highs, even though we're still going higher and the CTC is still in our favor, the highs aren't that much higher than the previous high, and you can see it's starting to squeeze now. And consolidate is the better word to use. So take that into consideration, and that squeeze now is taking place at a daily resistance level that I showed you. So be aware of that. We have traded above a previous high. Going back here to the 22nd of June, and as long as we stay above that high, then we're still looking for further upside movement. Same with 30-minute chart. Notice these highs getting lower or smaller as price has been going higher, and if you wanted to, you could see that just recently we are being squeezed in a consolidation range to the upside. So take that in consideration. CTC is still in our favor, so ideally we want to be trading above the previous swing low. In this case, ideally we want to be trading above the 40.5800 mark to give us, if it keeps trading above the 40.5800 in the next couple of days, then obviously we're trading above that major resistance level on a daily, and we could see further extensions. Otherwise, we could see consolidation still to occur the longer we go into this consolidation range. I'll just take you back to the 4 hour chart, for example. You can see in this consolidation range, if I get the square out, you can see that the majority of that movement that we've seen over the past couple of days has been within this band here that I'm going to put up now on the box. And ideally you can see prices now traded above that. We've seen a break above that, and we've had a pullback. Notice that the price action is now even though we have seen highs, it's at the top end, even though the price is pulling back down a 4 hour indecision. So you've had a breakout, indecision, pullback. If we can find price staying above the 14,5300 mark, then what we could be seeing is a realistic breakout, pullback, and continuation to the upside. So keep that in mind. If we do take that as a swing high, then you could see if we drew our trend and the moving average all below it and the CTC in our favor, all we need now is confirmations for price to stay above the 14,5300 mark on a 4 hour time frame to see further extensions higher. So the 14,5300, you can put that in as your support. There we go. So there we go on our hourly. There's the breakout of this consolidation range that we've seen. So if you want to put that in, make a note of it. So hourly consolidation range, voila. Even though range is still, you can see that these lows are still slightly higher than the previous ones. If you can find support now 14,5300 and bounce higher, then what we could be ideally seeing is a breakout, pullback, and continuation to the upside. Even though so as long as it can stay above 14,5300 during the course of today, then we could see further extensions higher. Next up is the US dollar against, or sterling against US dollar, apologies. And you'll notice over the past couple of days you've seen sterling gaining a bit of strength, indecision in between it all, but that's obviously to do with the news that we've seen over the past over the past week, in particular for euro. Let's have a look at if you just zoom out, you can see where we've come from, and you'll notice that we've broken a major trend recently, and we've seen further extensions to the downside. That downside movement has now come to an abrupt end as we've moved closer to the 100, a bounce off the 100% extension of the initial move, and we've seen a bounce higher. What it's done is it's obviously broken above a previous support or resistance area, the institutional moving average, and we've also seen price now testing the previous resistance or support area here, noticeably around about the 16,1200 mark. There is noticeably a prior support area in the past. You can see the price is consolidated here on a number of occasions over the couple months. So is this going to be the resistance level now, or what we need to see is the daily candle breaking higher than that and closing higher, which would definitely confirm that we're likely to see further extensions higher. If you look at the trend as it stands now, we've had two huge engulfings to the downside, and price is now trading above that. So that intermediate trend, whether you're looking at the short term or you're looking at the intermediate trend long term, you can see that if price can break above this previous resistance level or support and close, then what we're seeing is price still swinging higher, and if that's the case, then it's broken this small trend, breaking the previous resistance or support area, closing higher. Then we're looking at ideally this area here as our potential first target, and our second target, the underside of the major trend line again. So price, if cable can continue to trade higher against the US dollar, then what we could see is potentially our first target being the intermediate trend on a daily time frame here, roughly around the 16,2500 mark to start with. Notice the higher swings. It's also dictating that 16,2500 is a possible target for this pair, and you'll probably find that 16,2500 is the previous swing low, which happened this one over here on the candle on the 22nd of the 6th, which would take us back to, yep, as I mentioned, 16,2500. So there we go. Ideally, if daily candle can stay higher, then we're looking for further extensions higher. Notice CTC is still, however, negative. So hence the reason why we still only have everything going short, because we are trading lower and we have broken a major trend. And our intraday, we're looking for the price to close higher than 16,1200. Ideally, we want to see that on our hourly and 4 hour candles. a close higher would definitely confirm further bullishness, and then we can look at our going into the remainder of this week, looking at our possible entries on our 50 and 30 minutes for the extension to remain to the upside. You want to be able to see blue across the board for intraday trading, and sure enough, you can see that. So if you look at all our small time frames, the 4-hour, hourly, 30 minutes, 15 and 5, all blue. So confirming that bullish upside movement on the intraday time frames for this pair. So if the momentum can be kept up, then we could see our daily price rallying to the upside for the remainder of this week. And as I mentioned, those daily highs or target levels will be in play. Next up is the US dollar against Swiss franc. Let's have a look at the daily time frame to start with. Notice that the US dollar has been gaining strength over the past couple of days against the Swiss franc, ideally because of the news that came out for Euro, the austerity plan being passed by the National Assembly of the government, and we've seen Euro, Cable, and a number of others gaining strength on that news, and it meant that the safe haven pairs like Swiss franc in particular have seen price move against them, and they've lost some momentum in the past couple of days. So you can see the US dollar gaining a bit of strength against the Swiss franc because of that news, and that's coming on a previous bounce on a support area here. Notice consolidation range. Price is now testing this major trend line to the downside, so we could see consolidation. Ideally, if you want to see the US dollar gain further strength, it needs to be trading not above this trend line, but as well as the prior resistance or support area, which is at 855. So a lot of resistance above it. I would the US dollar still got to do a hell of a lot of hell of a lot of momentum, bullishness in order to break both these two strong resistance levels. Notice the CTC is well extended to the downside, so the US dollar needs to do a lot more than just finding a bit of momentum against the US dollar. I mean, the Swiss franc, it's got to punch higher. There's got to be some fantastic news in order for it to actually start looking bullish. We have got the first signal of a potential consolidation. It's giving us a heads up arrow here. We do need to see blue candles, and then once it's broken the major trend and is trading higher than the previous swing low, ideally above the 860 or 865 mark would clearly give us an indication of further upside movement. Then we might see the CTC going blue on the other side to confirm that drive, and then we'll look at possibly looking at the US dollar Swiss franc being positive. Until such time, we are still negative, and you can see that on a daily time frame now we're seeing a bit of consolidation on the European session open. Asian market didn't take it anywhere, also open and close, trading very flat, primarily because we're trading at a major trend resistance level, and we've also got resistance above it at 855 on a prior support and resistance. Notice that. So keep that factored in. We're going to see possibly consolidation. Price needs to obviously break and trade higher than this major trend line intraday, and even then you got not much movement because you have the 855, which happens to be a strong support and resistance level in the past in close proximity. So consolidation is going to be the call today on the US dollar against Swiss franc. Last pair of the day is the US dollar against Swiss franc. The US dollar against Japanese yen. Apologies for that. Daily, let's have a look at what's the setup, and you can see that the Asian market going into the European session, we've seen literally an hour ago, we've seen the US dollar lose ground against the Japanese yen. Price on Friday failed to close higher after this bullish engulfing pattern occurred. You can see price rallied all the way up to the previous swing, but failed during the latter part of the US session. We saw price revert to the downside and close low in the 50. So we know the 50 is acting as a strong resistance level. It's done so over the past couple of months, and you can see that's also taken place now where we've seen a bearish engulfing. So we've had a lot of indecision over the past couple of days. We've had this upside movement followed by a trading range high end of the wick, and then we saw Friday opened pretty much at the bottom, and then it literally climbed straight up to the previous high or swing and reverted to the downside. And however, this morning, Asian market wise, we saw a slight poke above the previous resistance level. However, the European session open and going into sterling session also we've seen price revert to the downside. Now we're having a bearish engulfing setup. If this remains the same and we see this indecision, then there's likelihood that we're seeing a bit of consolidation and indecisive trading range. You can see that the opens on all of them is pretty much on par, and you can see price today is trading at the lower end of this. So need to see closed lower. By extending lower and closing lower will be a bearish engulfing the 2 previous days with the data, and will be a negative outlook for the remainder of the week. If not, if price can stay above this area here and close, then we're seeing a support area being forged at this particular point, and there's a likelihood that we can see it bounce higher. Notice the CTC is still extended to the downside, but we have the CTC first 2 requirements in play. We have a blue arrow and the candles are blue. However, the CTC is not on either side. So until that happens, then what we should be looking for is consolidation take place, or consolidation, and that's exactly what we're seeing here. Very indecisive the past 2 days, up down, not too very sure. However, it's still trading above the 80, which is a positive long-term support area. So the longer it trades above the 80, then the more probability we could see upside movement. However, looking at the major trend for this particular pair, you can see we've been trading in a consolidation range to the downside over the past number of months. So squeezing, even though we are negative, it's consolidating. Supported area, but it's consolidating. It's still to the downside. So ideally, if we see a bearish engulfing today, then we're looking at 80 as a potential target over the rest of this coming week. Intraday charts, you can see the setup forming. Hourly failing to trade higher, forming a lower swing. Even the CTC is in our favor. Asian market open, didn't do anything, didn't trade higher after the swing high, and fell over. The same can be said for the hourly chart. We see the CTC in our favor now, where we've had a high and it's swinging lower, swing low, and it's set up this potential failure at a prior resistance level here at 90.80, and the CTC is in our favor, and we've seen a bearish engulfing just recently in the past hour or so, which is confirming the negativity to the downside. And that candle there closing lower than all the moving averages is confirmed that the bearishness is starting to set in, and we've seen that. Same here on our 30 minutes. If you're looking to trade short, you'd looked at the trend for this particular time frame. You can see that the highs are lower, and ideally you want to see a close lower than the institutional moving average. And going into this morning, you can see the price was trading below all the moving averages. A little breakout, pullback, a failure to trade higher, and we've had this bearish engulfing pattern set up here at 8 o'clock GMT, which is now confirming this candle here is taking out all these prior consolidation range, and we should be looking at ultimately the 80 as our first target for this pair. That's it for today, guys. Hope you have a fantastic trading day. Be aware that today is a bank holiday in the States. It's the Independence, 4th of July today for the US market, and so expect it to be relatively quiet to a degree. We've seen a lot of movement this morning, so there's still price movement to be seen. Just take it on board. If anything, if you don't see anything, it's just primarily because the big boys in the States aren't really taking part today. Otherwise, trading will go ahead across all the other countries, and the currencies will still trade nonetheless. So factor into your trading. Just have a look and see if there's any news announcements that might move things. Just remember that the austerity plan was passed last week. It's just a short-term measure. Obviously, during the next couple of months, the IMF, EU plus Greece, etc., will be still sitting down and bashing out further details regarding their bailout. So what we saw last week is just a touch-up. Just be aware of it, and if there's any momentum, it might be on the favorable moves that we saw last week, end of last week, and the DAX and the CAC, etc., like that, might see progressive further side movement on that. So take that into consideration. Have a fantastic trading day and a beautiful start to the week, and trade serenely.